Good morning, everybody. Good morning. Hope everybody's doing well. We'll get started in just a minute. I'll be right back. Good morning. Good morning. Hope everybody's staying warm. If you're on the East Coast or even the Southeast, where I'm at, fairly chilly this morning. So give everybody another minute to file in. Good morning. Okay. We'll go getting started. This is Michael coming to you from Game Edge on Thursday, January 15th with our pre-market prep session. As always here at Game Edge, we'll start with the three pillars. Good morning, Burl. Sentiment, structure, and trend. Then we'll cover some individual equities at the end. And I posted the SPX0DT. Good morning, Will. All right. Good morning, Jeffrey. All right, let's go ahead and jump right into it. Market trend model based on the tick index. Quick orientation, bolded white line is our intraday instantaneous cumulative tick. I'm going to show you the TradingView market trend model from yesterday also. We are using the TradeStation model as our core standard for mechanical portfolios, but I will say I'm becoming more and more adapted to the TradingView market trend model. I'm using exclusively for swings. I took SPXL yesterday on a swing. I'll be closing part of that position this morning. So we'll go over that here in just a minute also. But quick view is we're talking about the market trend model, significant move to the upside, and then we were consolidating. And what we wanted to see was this bolded white CT start moving back above these shorter term moving averages, indicating there's more buying versus selling the overall market. And that would get me into a little bit more swing position again to the upside. We'll see if it lasts, but I take these triggers whenever they occur. So again, the colored ribbon, red above cyan, we're continuing to the upside, positive slope. Mechanical portfolios turned on. We continue to put capital to work on a longer term view and our mechanical portfolios, and they're doing extremely well. Our P-Trans to PGEX mechanical portfolio, as you can see now, we're 87.5% win rate for year-to-date 2026, which is outstanding. Current positions here. And then since inception, 2023, we're still ticking along at a 72.8% win rate with 389 total closed trades over that 3-year period. So again, we just continue to have a high win rate with this mechanical portfolio. It is market on open trades only. So if you're a 9-to-5 person or really don't want to watch the market during the day, this is really a great portfolio. We closed last year roughly up 21.2%. I think we're somewhere around there, 22%. And again, just completely mechanical. There's no discretion. You open and close the trades, and that's it. And so we continue with a high win rate mechanical portfolio there. So if you're interested in that, we have exclusive blog posts, and we post on X about it also. So make sure you check that out. All right, moving on to the market trend model from the from TradingView. Again, like I said, we've rolled this out a few weeks ago, and we continue to tweak it and get a little bit more adaptive to it. But the quick takeaway is this green is basically that white line that you saw here. It's just a little bit more color orientated. Obviously, if we're moving to the downside, it's, the background is red. We start moving back to the upside. The background turns green, and then we start emerging above these shorter term railroad track moving averages. This is to get into motion. That's exactly what I did yesterday. Got into motion with leveraged ETFs on the long side, and just continue to carry that to the upside this morning. And most likely I'll be taking some profit. I don't think we're going to get above 7,000 today. So using these as triggers to the downside and to the upside continues to prove very profitable. And not necessarily a little bit of discretionary involved, but can be very mechanical also as we cross back to the upside. So again, you want to see these in positive slopes also, but again, more buying versus selling the overall market. And that tells us which side of the market we want to be on the long side. Even after the dip yesterday morning, we saw buying come in pretty extensively into the midday and into the afternoon. So, all right, let's go ahead and move on. The SPX complex is the largest, most notional value. Again, this is the combined. We'll separate them here in a minute, but we've been combining them just to give people an understanding of what happens when you combine the SPXA and the SPXP. So here, 84% of the total OI were call dominated above and below spot price. But as always, systematically, we go through these. We look at the gamma condition, and then we look at where spot price is to transition and where the transition levels are. Again, quick bottom line is if you're above transition, you should be bullish. Below transition, you should be a little bit more weak or bearish. And then within transition, it's probably going to be choppy. So implied open is above transition now. So we'll be a little bit more bullish on the day for a move up towards 69.70, 75, and then ultimately 7,000. And if we're below transition, then we'd be looking for a little bit more weakness for a move back down towards 6,900. So again, those are quick if-then statements that you can get from the web app, and just use those as your trading plan. If you're above, look a little bit more bullish, below bearish, and within the transition, it's going to be choppy, and that's probably a no trade zone. All right, moving on the SPXA, we've separated that. I went ahead and moved to the February expiry. Today is the last trading day for the SPXA monthlies. So we're moving on to the Februaries now. Call dominated above and below spot price. So the one thing you'll quickly note is that transition widens. Again, uncertainty within the overall structure and positioning. As you'll note, we have a lot of net OI, low exposure areas. Obviously, 7,000 is that upside target into February. But again, just kind of a hodgepodge of positioning so far. So our thesis for February is we may just be in some choppy price action back and forth that's going to be driven by the SPXP. As you see some large strikes at 69.50 and 69.25. Again, those are positive net deltas. Those would be key areas to stay above, and that is the confluence of the transition I just talked about. So again, we'd like to stay above 69.50 for the bulls to have a opportunity for price appreciation towards 69.85 and 7,000. And then you see double strikes up there at 70.25, 70.50, 70.55. So we do have speculation to the upside, but again, that 7,000 is going to be that bogey that's going to be difficult to get over as of now, as you see that COI and just significant charm, net delta, and gamma sitting at that level. All right, moving on to the SPXP. Again, SPXP, the expiries turned on here, 77% of the total OI. That's the highest quartile here with our interactive bar and our web app. These are put dominated. You'll notice the net GEX here is negative. So for the SPXP, moving on, you'll notice the highest OI expiries is put dominated here. So again, transition area 69.50, 69.35. So for above transition, we'd be looking for price appreciation. But you'll note all these out of the money calls here have significant overhead charm. So this is going to be a difficult road to move up towards the 7,000 level, even though we're probably going to open 69.60. But again, pushing to the upside is going to be difficult unless we see out of the money speculation come in and overcome this charm level, which would be mechanical opening of contracts to push us to the upside. So again, probably going to be slow going to the upside with this significant amount of charm. We'll look at that on the 0 DTE. But key takeaway is you need to stay above transition. If we're below transition, obviously 6,900 would be the area to the downside. Good morning, Tom. All right, moving on the SPXP GEX ratio. Again, this is like a put call ratio, but we add a time component, which is gamma. So that weights this to the short dated call versus put gamma. I discussed yesterday about dropping below the one line, that we would need to see that recover and be in accordance with the SPXP moving up. So this is indicating that short dated call speculation, short dated call gamma is coming into the overall complex, overriding the put gamma. We're back above 1, which is that theoretical balance point between calls and puts and bulls and bears. So again, we'll give the edge to the bulls as they've moved this meter or line back above the +1 level, but not significantly. So if we see SPX continue to appreciate, we're going to see the GEX ratio in a positive slope and moving to the upside, indicating out of the money call speculation is continuing to come into the complex, which is driving the overall bust. And if the tail wags the dog, mechanical positive deltas coming into the complex will need hedged by the market makers and dealers, and they'll have to buy to the upside You'll see that GEX ratio is 1.2 now. So we want to see this continue to the upside as the SPXP appreciates. But we were talking about that divergence previously that we were seeing. SPX was rising. GEX ratio was flat to declining. So again, that out of the money speculation was dropping. And our thesis was that most likely we're going to see some stalling or pullback in the SPX, which we did. And now we're moving back to the upside. All right, SPXP delta balance. Again, this is separating the overall option structure above and below spot price. So the green dotted line is above spot price. That would be your out of the money call speculation or in the money puts. You can see we bottomed yesterday, and now we're moving back to the upside as you would expect. Out of the money speculation is back above zero now. So we'll give an edge to the bulls to the upside. But again, it's not driving all the way up past zero that we would like to see for that out of the money speculation. So we got the resultant bounce, and now we'll see how that plays out. You'll see going into the monthly expiry here, we are above zero. You'll see the left-hand plane, again, that's in the money calls. So again, we're in the money call supportive on any pullback, as I talked about. And you see the delta balance pegged at 1. Delta balance is now 1. So we'll give an edge to the bulls today for being supportive on pullbacks, but not necessarily the price appreciation to the upside. So we'd have to see that intraday via our vol M command. We'd have to see those out of the money calls, both of those call and put centroid slopes rising to the upside, indicating speculation is coming in, and market participants are targeting higher prices. So we'll watch that today, as well as the market trend model continuing to trend to the upside. Now, after monthly OPEX, you'll see this drop here. Again, this is probably most likely some weakness that creeps into next week. This is projected by market participants here. Obviously, Monday is a holiday, and then we might see some weakness into Tuesday, Wednesday, Thursday, and then you see a recovery into the end of next week. Again, right-hand plane, you do see a recovery here, but not significant, just a slight rise on out in time toward the 20th. But the left-hand plane, you see it dropping. Again, that's in the money calls, most likely expiring for monthly OPEX, and then put hedging coming in and taking over. And then we see the cycle turn back to the upside. So anticipate some weakness next week, post Monday into Tuesday, Wednesday, Thursday. Again, we're not talking a significant crash in the overall market. We're just saying short-term weakness, cycle of out of the money calls, profit taking in the money calls, profit taking into monthly OPEX, and then a pullback with the overall SPX. Again, we'll continue to monitor this day over day. All right, moving on the SPXP net stat command. So we've added these transition levels. These are key levels for everyone to watch throughout the day. So the quick takeaway is if we're crossing these levels, this is where we're transitioning from an out of the money puts to an in the money calls. So this is transitioning to a more bullish state. You see this is out of money. We cross 69.79. We'll transition to in the money calls for charm. Again, those would continue to be supportive. And then you see this out of the money calls transitioning to in the money puts. So if we're below 68.74, again, that's where we would transition to that overall state. Again, same thing with these transition areas. So this is what we watch as the day unfolds and we cross these levels to the upside or to the downside, transitioning from a more bullish state to more bearish state, or a more bearish state to the bullish state. So this one here is out of the money calls back towards in the money puts would be if we drop below 69.36. So right now we're at 69.60. So that's the key area to watch. That would put a little bit more negative delta into the overall complex and probably push us down. 69.07 in the money calls transitioned out of the money puts. Again, that would be an area where we transition for bullish. As you see, we're in the money calls, out of the money calls to more bearish, 69.07. So dropping 69.36 would be the first domino. 69.07 would be the next domino. And then you transition to a more bearish state. And we could be a lot more cautionary and probably looking to the short side on the overall market. Same thing with charm, same thing with gamma, same thing with Vanna. You can see where these transition levels are. Again, these are very key for the day as you move up and down the structure and spot price moves up and down the overall structure and transitioning from a more bullish to bearish state. And that's basically what we look at. And that's why we've implemented these key transition areas that you should be watching throughout the day. All right, moving on the SPXP 0DT call dominated for today. Again, as I discussed in my X post, narrow GEX transition, or sorry, narrow DEX transition, widened GEX transition, but confluence of P-trans. So staying above 69.40, ultimate line in the sand for us. DS 69.50, that's a drunken sailor range. You see low exposure net OI here. And then once we're below DS, all the way down towards 6,900 would be most likely where you see some stabilization, as you see a large positive charm there, and net delta as well as gamma. And we talked about that on the net stat command in the money calls 6,900. Net charm level 6,900 out of the money puts. Those will be positive and supportive as long as we're above there. Out of the money calls, headwind 70.25, and then 69.60 out of the money calls. If we open above this, we'll capture these out of the money calls, adding more positive delta to the overall complex. Have to hedge that. So most likely we could see a push towards 69.75 is the thesis for today. So hopefully that helps for today. Easy structure defined. Need to stay above 69.40. Below that, a little bit more weakness. Above 69.60, we're going to open right at that peak X level. So we may see some stalling and profit taking, and then to the upside, 69.75, and then 7,000 for the day. All right, let's go ahead and jump into our trading view chart. Okay, so we're at 69.62 this morning. Let me jump back over here. So I have all of these laid out and defined for today. Transition areas overhead. Pre-market price is not updated with our market trend model. So getting above and staying above, as I said, 69.40 and 69.50 will be key for the bulls to be supportive and price appreciation towards the upside. All right, as always, join us at gameedge.us newsletter. Go ahead and put in your email. You get delivered this on the weekend, Beyond the Bell newsletter. And our free courses, Game Edge Fast Pass, all free education. Make sure you check that out, as well as our blog, tons of education here. All right, let's go ahead and jump into individual equities. I see a few posted already. So IWM, we'll look at today's expiry. Call dominated for IWM, 264 to the upside, looks good. IWM was above P-Trans yesterday and supportive all day long, even on the pullback. So IWM looked good. 16th Friday expiry, call dominated, supportive. You see all the calls below us. Everything is good there. Quartile, call dominated, upside. 265, 270 is the upside as of now. That's where I look for some stalling, but we do have speculation all the way up towards 270. So Roku. Let's look at the quartile. Call dominated. We are, let's see, transition is 111 to 112. This only has weekly expiries. So you're actually below transition. You're below a flipped index and PGEX. So even though we're all call dominated, we're not going to be going much higher than 110 on Roku. And then after this expiry, structure does move up to 113. Transitions overhead though. So I would look for 109 first. You see a double strike there of short calls there, it looks like. And then 113 to the upside. So that's where I'd be looking for a Roku. Let's see, ASST. Let's see, ASST. Yeah, very low OI. Structure not, wait, am I right? ASST. Yeah, nothing that we would look at on ASST. If it's $1 price, I'm not sure if that's really true. That's a penny stock to us, so not anything we would cover. Okay. mRNA. Hopefully that helps, Shaw. mRNA, let's look at this Friday's expiry. Call dominated, above below spot price. You're above transition. Not much speculation to the upside. You're actually above PGEX, so I'd look for a pullback on that. Friday's expiry, next Friday's expiry, 42.50 to the upside. You see significant calls there, so it looks good to the upside. 42.50 on that one on mRNA. SWK. Ooh, that's sorry, did that over. That's Stanley or Black & Decker, I think. Let's see, this Friday's expiry. This only has monthly expiries. Okay, so call dominated. We'll go past this monthly expiry. Yeah, OI is too low for us to look at on SWK. Total OI is only 2,000. So dealer metrics and hedging control are not in play on that one. SPXA for June. Sure. You want us to isolate June? Oh, there we are, isolated. Nothing. So here's what I'm going to say, Jeffrey, on SPXA. It's not going to change for June unless we have some significant change in the overall market and sentiment and structure. So we talk some major news event. But the SPXA is not going to change much. Institutions are not necessarily changing their positioning day over day, right? I mean, what they have entrenched right now is pretty much going to be entrenched. Yes, there'll be some adjustments, but you wouldn't need to look at the SPXA for June really until the end of the month on February, end of the month on March, and end of the month in May. That's really not going to change that significantly. That said, it's call dominated, 7,000 to the upside, 7,100. Hopefully that helps on that. Not being critical, I'm just saying institutions are not changing their significant positioning day over day on the SPXA. That's why we look at the SPXP. And then everybody complicates it by putting the SPX together, SPXA and SPXP, and then they don't understand what's actually controlling price, which is the SPXP, which is your speedboats, your daily and weekly expiries there. So Walmart, call dominated, above and below spot price. Walmart looks good, 120 to the upside. Next expiry, 120, looks good there. So Walmart looks good for price appreciation up towards 120. Tom, I will go over that here in a minute. Let's see what you're talking about there. Netflix, call dominated, but significant overhead negative net delta at 89 is going to be tough for price appreciation. Let's see if those expire. Not necessarily, even though we're call dominated, structure moves up to 93, but you're within transition. So advancing structure, but 89 to 93, that's going to be a slow road to go. So hopefully that helps. MSTR. Quartile, let's do this at Friday's expiry. Call dominated, 180. Actually, INGEX and PGEX are flipped. So 180 to the upside of where I'd be looking on MSTR. And we're at 180. After this Friday's expiry, the structure does expand to the upside towards 195. So MSTR looks good towards 195. Need to get above transition though. Hopefully that helps. Kim, ARM. This is, let's see, put dominated, PGEX below INGEX, significant overhead in the money puts. So those negative structures, call dominated after this expiry, but 105 below, and it's expanded. So not looking good on ARM for significant price appreciation to the upside. Even though we do see the structure expand to 125, but it's still put dominated. So I think that's going to be difficult to move to the upside. All right. Could you interpret what yesterday, how went from negative gamma to flip instantly overnight? I'm not sure what was negative gamma yesterday. We were call dominated to start the day, and we're call dominated to start the day today. I'm not sure what you're talking about negative gamma. So the SPX 0DT. Yeah, I can go over QQQ. 0DT yesterday was call dominated positive gamma to start the day. So let me know let me know. And pullbacks were going to be supportive yesterday, down towards 6,900. I think 6,900 was where I was discussing. We actually overshot towards 6,887, which was actually the bottom of our expected move yesterday. And then we recovered back towards 6,925. The sharp sell-off for Yeah, just because you're in a call-dominated positive gamma environment doesn't mean the market's not going to go down, right? But the key takeaway is if you're call-dominated below you in the money calls, like I talked about on that, on the net stack command or on the DBH here, we were entrenched in the money calls. See this red, even though we're at zero, that's going to be supportive on pullbacks to the downside, right? You're still going to get pullbacks. It's not the market's not gonna go down. I mean, it can still go down in a call dominated positive gamma environment, but you continue to have continual supportive type action until that changes to put out of the money, put speculation to the downside overriding, right? So that's what we were talking about. We were most likely going to still be supportive. I said pre-market yesterday, 6,900, and then I think I said 6,980, but 6,900 was where I was looking for the market to stabilize. We went below it, got sweeps below it, stayed below it a little bit, and then recovered back above it. So that tells you exactly that in the money calls are still being supportive there. The problem is people look at the intraday price action. They're like, oh my gosh, the market went down. You said it was call dominated. Positive gamma, the market can't go down. That's not true at all, right? Intraday call versus put speculation is going to drive the market down. And that's what we were seeing on the our vol-M command yesterday was market participants were speculating to the downside towards, I'll go ahead and pull this up, towards, hopefully this helps. You can see here, right? Call slope to the downside, put slope to the downside, but look at the put slope stabilize. Market participants were not speculating. Look at this, stabilizing flat, and then watch the call slope start to rise, right? So we flattened out, we stabilized where into 6,900, okay, 6,980, but then the call centroid started rising back to the upside. So you see this throughout the day, right? Here we go. Put centroid goes to the downside. Market participants are speculating. We got the pullback, flattened out here. Market participants were not speculating to the downside. When this flattens out, when that centroid flattens, they are not opening new contracts, further strike prices down. And then we started getting the result. And you actually saw the put centroid actually start to go up there. And you see it grab a positive slope, right? So put centroid, negative, negative, and then negative here. And then we actually see it rise positive, right? Flatten. Now it's flat, flat. And then it actually starts getting positive. See that? Positive, positive. Flipping back and forth between negative and positive. That's why I said, that's why I think I said, yes, thanks to some of our members, I said, I don't think we're going to go down anymore. Like, we were not seeing those put speculations continue to drive to the downside. In a significant move to the downside, you'll see both of these slopes pointing down into the negative. And that means market participants are speculating further and further out of the money strikes. But again, we came right down to 6,900, dropped below it, market stabilized. Participants were not speculating to the downside, and then we actually started lifting back to the upside. Hopefully that helps, Tom. Let me know. SanDisk. Okay, then I got to go. Running over time. Sorry. So this is how we use our intraday volumetric tools too, right? Understanding where these key levels are at, and then understanding what market participants were doing. They just basically shut off the speculation to the down. Yeah, they turned off the speculation to the downside, turned off the spigot. When that happens, the market's going to stabilize, and that's why we watch that. So. Let's see, call dominated above and below spot price, above transition. 400 is PGX. Structure stays at 400, even though it's call dominated. So upside is probably going to be a little bit more difficult on SanDisk. So, all right. Thanks everybody for joining us. I hope that helped, Tom. Let us know. We have a 14-day free trial in the Discord. Come join us, and we'll go through all of this with you individually. We actually have one-on-one Zooms if you want to do it. Again, if you don't make a good trade within the first 14 days, let us know, and then we'll be happy to help you. But again, everything's in there. Extensive member community live in there, helping members get up to speed on how we use the tools and how we navigate the SPX option structure every day. So, all right, thanks everybody. Manage risk as always, and have a great day.